Have you ever wondered what happens behind the scenes when you tap your card for a coffee or buy a pair of sneakers online? Most of us don't think twice about it, but every single time you do, your data and the small slice of the price leaves Europe. Right now, two American giants, Visa and Mastercard, process about 2/3 of all card transactions in the Eurozone. They're the invisible pipes of our economy. But Europe is currently attempting something massive. They're building their own financial heart to stop relying on these US companies. It's called Wero, and it's part of a plan to reclaim what leaders call European payment sovereignty. In this video, we're going on a deep dive into this multi-billion euro project. We'll look at why past attempts failed, how the new technology actually works, who is paying for it, and why your banking app is about to look very different. Europe has actually tried this before. Back in 2008, a group of banks started Project Monet, named after one of the EU's founding fathers. But it collapsed by 2012 because it lacked political support, and many banks were actually making too much money from their shares in Visa to want a competitor. So what changed? Geopolitics. The turning point came in 2022 when Visa and Mastercard suspended operations in Russia following the invasion of Ukraine. This showed European leaders that international payment networks could be used as political leverage. If relations across the Atlantic ever broke down, Europe's entire retail economy could be paralyzed in an instant. As the head of the European Central Bank, Christine Lagarde, put it, having our own system is now urgent for national security and data sovereignty. This isn't just about printing a new plastic card. In fact, Europe is trying to skip the card phase entirely and move to something called account-to-account payments. Wero is a digital wallet developed by the European Payments Initiative, or EPI, which is a consortium of 16 to 25 major banks like BNP Paribas and Deutsche Bank. Instead of using the card rails owned by Visa, Wero uses something called SEPA instant credit transfers. When you pay with a credit card, the money goes through a long chain: your bank, the merchant's bank, the card network, and the payment gateway. It can take days to settle. With Wero, the money moves directly from your bank account to the merchants in under 10 seconds, 24/7, 365 days a year. Think of it like sending a text message, but with money. You can pay someone just by using their phone number or scanning a QR code. Building a rival to the world's biggest payment networks isn't cheap. The banks involved have already invested over 500 million euros just to get started. Some experts estimate that to truly reach sustainability and build a necessary security, the total investment could reach between 7 billion and 12 billion euros. Why would banks spend this much? Two reasons: margins and competition. Currently, banks have to follow the rules and fee structures set by Visa and Mastercard. By owning the pipes, the banks keep those margins for themselves. Banks are terrified that if they don't act, American tech giants like Apple and Google or Chinese players like Alipay will take over the entire payment market. For you as a consumer, Wero is mostly free. For merchants, however, this is a game changer. Card payments usually come with interchange fees that can cost a shop between 1.5% and 3.5% of the total transaction. Because Wero bypasses those networks, the fees are significantly lower, often just a small flat fee per transaction. For small businesses, accepting the new European standards could be 3 to 4 times cheaper than using international cards. But there is a hidden cost: security. Visa and Mastercard have 50 years of data and advanced AI that checks over 500 risk factors in less than a second. Wero is starting from scratch. Since A2A payments are instant and irrevocable, if you get scammed into sending money to a fraudster, it's much harder to get it back compared to a card chargeback. Wero is trying to fix this by building a new dispute mechanism, but it will take years to match the incumbent's level of protection. We are already in the middle of the rollout. Wero is live for person-to-person payments in Germany, France, and Belgium. By 2026, it will expand to the Netherlands and Luxembourg. The next big step is e-commerce. In late 2025 and into 2026, you'll start seeing a Wero button at checkout for major retailers like Lidl, Decathlon, and Air France. Eventually, they plan to add in-store payments via NFC or QR codes, subscriptions, and even buy now, pay later features. But Wero isn't the only player. The European Central Bank is also working on a digital euro, a public version of cash that would be legal tender everywhere. While Wero is a private bank project, the digital euro is a public one. They're meant to work together, but there is still a lot of debate about how they will coexist. So, Is Europe's $24 trillion breakup with American networks actually going to work? The political will is there, the banks are spending the money, and the technology is live. But the biggest hurdle isn't the tech, it's us. Will we, as consumers, give up our card rewards and familiar habits to support a made-in-Europe alternative? What do you think? Would you switch your daily payments to a bank-owned app if it meant your data stayed in Europe? Let me know in the comments. Don't forget to like and subscribe for more deep dives into the tech and money shaping our world. See you in the next one.